What's up, everybody? It's your girl Erica from the Classy Climb blog coming to you guys today on a Wall Street review week with Mr. none other than Diamond Dave. Diamond Dave, please tell somebody who you are and where they can find you on social media.
So what's going on, everybody? I'm really happy to be here. My name is Diamond Dave, also known as David W. Williams, the founder of the highest paid part-time job in the world options training course. You can find me on social media, YouTube as Diamond Dave, or on Instagram. It should be Diamond_Dave.
Love it. Love it. So I love bringing you on. You have great commentary. You actually are in the stock market. You're actually making money. This week's been crazy. Now, on one hand, I'm in Texas. It's massively snowing. It's out of control. And, Jerry Jones is killing off, gas, natural gas. Okay. Now, but also on the other tip, Cathy Woods, sometimes it's like they build her up and then they're just tearing her down. And I'm just kind of, as a person, not an expert, as I always tell people, I do some things, but I'm not an expert.
Okay.
What can we get from an expert? What's going on with the Cathy Woods situation?
Well, I mean, Cathy Woods, and I was talking to somebody the other day, and this is very interesting, where most people, let's say 2 years ago, had no idea who she was. Mm-hmm. And what we've kind of seen is, and really this has a lot to do with a lot of online media, where they've kind of promoted her, and then it kind of becomes like a follow the leader type situation, where it's so inexpensive to create online media. Mm-hmm. If this online media entity can get her on, then it's so inexpensive to create content, then everybody can get her on. So she's kind of become the hot fund manager. Mm-hmm. The question you want to ask yourself is, one, why has she become the hot fund manager? And why do you think if she has an opinion on something, why it's more credible than your opinion or more credible than the opinion of another fund manager? Because there's thousands of fund managers. Mm-hmm. So why has she been kind of selected as the go-to fund manager with everything, let's say maybe EV or maybe tech related or maybe bio related, to where they keep presenting her and her opinion as maybe the opinion that everybody should go with? I'm not discrediting her experience because she has a lot of experience in the space. What I'm saying is that why has she all of a sudden now become the go-to person for these particular spaces, when there's a lot of other people in these spaces also, but they never are allowed to kind of put their voice or put their name in the hat?
I feel like, and this is me looking at as a marketer, Warren Buffett is like this person that they've just held up for years. But to me, it's slightly out of touch. That's just my opinion. And it's almost like the media is like, who can we pick to slide in this space that we can go, look at this person. And I feel like she's a boomer, like close to being a boomer. I think she is a boomer. She's a white woman. A lot of white women want to invest for their retirement. I feel like she fits this type of checkbox category. Not that she's not talented, not that she's not smart. It's an easy media play to be like, look at Cathy Woods. Now, on the other hand, we just saw the kerfuffle with Wallstreet bets and the young energy that had Elon Musk talking, that had Kamafi. Exactly. You had some of the people come in, even the Mavericks owner. What's his name again? The Mavericks owner, Cuban, right? Who I'm like, dude was on Shark Tank. But it's this young energy push, and it's almost like the Elon Musk, the young people fighting against the hedge funds versus the old Warren Buffett. So if the media can kind of put you like, here, look, Cathy Woods, she's over a hedge fund. She's a nice lady. It puts this softer, not older white male face on hedge funds. And this is just my, of course, opinion. People can have a different one, but I feel like that's what she's providing for the media.
Yeah, and I can agree with that. It's good that, you can see it that way, because one of the things that you see a lot of times in kind of marketing, you want to kind of segment. And so her bringing in kind of that older white woman, professional type perspective, I can understand how that could be attractive to a lot of people. Mm-hmm. And they may be able to create an attachment to that more than like a Warren Buffett, because he's worth so much money, he's been around so long, a lot of people can feel detached from that. But what we saw with the Wall Street bets play is that because that's not really her space, her lane, we saw a lot of other guys try to kind of put their input into it, like Musk, like Cuban, because they don't really fit that archetype of a Cathy Wood. But because it's so much of a younger crowd that's kind of against the establishment, that's how they were able to kind of throw their hat into the ring.
And some of the arguments have been, oh, they're locking us out of things. But once you learn the game, no one can really lock you out.
Exactly.
Am I right or am I wrong?
Yeah,
Except
right.
for when it came to the Robinhood thing. Right? So Robinhood's like, oh, y'all learned how to do it for real? Swoop, off the table.
Yeah.
Lucid has gotten a lot of commentary. Can you give us some evaluation on that stock? And I'll put it up on the screen here shortly.
Yeah, I mean, so Lucid is another one of these EV plays. To me, it's still somewhat speculative. The thing about Lucid is that they're supposed to be coming at it from the high end space, right? So their first release is supposed to is projected to be this summer. I think their car is going to cost, I want to say, at least maybe at the $100,000 mark, a little bit higher. My question with their offer, their initial offer, is that if I'm a high end car buyer and I want to go EV, why wouldn't I go to who I'm already buying high end cars from? So the question is, if I'm already buying BMWs or Mercedes Benz, and I know BMW says they got an EV coming out, why wouldn't I go BMW for EV? Why would I go to a totally different brand? And so my question with a lot of these EV companies is that, first, I want to find out, do they have manufacturing capacity? Can they manufacture their own cars, or do they have to get it through somebody else and they're going to essentially just white label it? But the second thing is that how are they going to penetrate the market? Because if we're going to go after the high end space, a lot of those people are very brand and status conscious. So they're buying high end because of the status associated with that from a marketing standpoint. So then how does Lucid give them that same status? Because I don't necessarily see, if I'm going to spend $100,000 on a car or maybe even more, am I buying it just because I want to do an EV play? Or am I buying it because I want the status associated with being able to buy high end? And does Lucid provide that with their particular offer?
So something I had heard in one of my groups that I'm in. Whoops, is the screen whack right? Maybe, maybe not. Let's see. It's too much graphics for it. Hold on. Let me pull a different page up. So CCIV stock soared 30% when they heard that they were nearing a deal with Lucid Motors. Now, this stock I've been hearing about a while, Churchill Capital Corp, but only because of I'm in certain groups. Let me see if I can share the screen again now. And someone said Lucid had a longer battery charge. Interesting.
Yeah, see, but thing is that, you know, if you're a high-end buyer, so if I'm going to spend $100,000 on a car, do I care about the fact that their battery can go 500 miles per charge, or do I care about the status associated with owning that particular brand? So I think getting caught up in the technicals is not necessarily why somebody would spend $100,000 or greater on an automobile. The same thing if I buy a Bugatti or I buy a Ferrari or I buy a Lamborghini.
So even here, if you can see, let me know if you can see it. Everybody put a 1 in here. Can you see the chart? Do I need to make it bigger? Let me know, everybody. Like the group I was in started talking about it, and I'm like, but now I'm like, dang, I should have bought, right? But it's the conversations of new tech, new things coming along that is getting this to happen. Now, some people are saying, my Business Insider said the other day, wait for the correction in the Churchill Capital stock. Now, I'm always leery when I see those articles because I'm like, it sounds like they're pumping and dumping it or making the price lower, like beating it up so that their friends can buy it.
Yeah, I mean, but what you're going to a lot of times what you see with these SPACs is that you get the merger news, it runs up, and then once you actually have the merger, it sells off.
Right.
So if we think that Lucid Motors is going to be a player in this space for the next 5 to 10 years, we don't necessarily have to get in now. We can wait 6 months and still be able to get in because we think they have a long-term future. Now, if you're just trying to trade it, then you got to really worry about your timing of it. But if we're looking at this company as being a valuable car manufacturer in the EV space, you may not have to get in. Maybe you can get in at $100, you know, because they've established themselves. They've shown that they can actually bring a product to market. They've shown that they can actually drive some sales to this particular product. They've shown that they got a forecast for the future that makes sense to you. But if you get in now and this whole thing falls apart, well, then you can just get trapped into it. Because what happens with the SPACs is that the hedge funds fund these things early. When everybody runs in because they want to try to beat the pre-merger news, that's when they just exit. And they just trade places with retail.
So we should probably break down what a SPAC is for the audience, for people who are like, what's a SPAC?
So I don't necessarily know what this is an acronym. I don't necessarily understand what each name of the acronym means. But essentially, it's just a way of getting, to me, it's a way of where you almost create a shell company. And you create the shell company, you fund it with a lot of money. And then what you do is you just merge it with another company that's already existing. And then you combine it. And then now that's the company that's essentially that you're going to take to market.
You did a great explanation. It's a special purpose acquisition company.
Okay. Yeah. Special purpose.
Yeah. You did it right. I was just going to let you do it. But they basically call it a blank check shell corporation. Yeah. So you were spot on. I just wanted to let you just let them do. And people make a big deal of them because they're like, oh, another SPAC. And I'm like, and the reason I think they're making a big deal of them because they're like, who are you letting in the current economy we have just have a blank check? Right?
Yeah.
Because I'm like, ooh, you got to show me some progress, right? So, Dale Singer, Facebook co-founder, latest to join a SPAC bandwagon. Basically, there's a couple one that says, as the SPAC frenzy continues, questions about how to rise. And I just realized I'm not even sharing my screen. I apologize, y'all. Hold on. I'm talking. I'm like, oh, yeah, they see my screen. They don't. Give me a second here. I'll go ahead and. Can y'all, let me see. Let me do it now. Oh, okay. Sherlock Holmes said, what's the difference between a shell company and a zombie company? So Sherlock Holmes, a shell company can be just literally just a piece of paper, right? It's just a piece of paper and no one's even using it right now. A zombie company, which I'll go more in depth on the second show we'll do. But yesterday, if you watched the video and people said, Eric, I didn't understand it. And I'm like, I apologize. I should do better. A zombie company is sometimes when you see those bodegas, those laundromats, those places where they stay open, they make enough money to cover the bills and pay the employees, but they need infusion. If one thing happens, if a fallout happens, if a couple, in the laundromat, a couple washing machines go down, they got to sell it because they don't even have the money to fix it, right? If you see some of these fast food places, the Mexican restaurant changes hands every couple of years because something goes wrong, and they make enough money to pay everybody. They just aren't in a growth position. And so I apologize because I did that show and I was like, man, I didn't do it well enough. But yes, zombie companies, Tara, it made sense to you. Thank you. Okay. Because I was like, some people were in the comments like, I don't get what you're saying. It's just like when you see a store somewhere and you're like, how is that store still open? And it's literally like, even when I would see Barnes and Noble sometimes or different places, how is that place still open? And it's really because they have enough to pay the debt. They have enough to pay the employees. They don't have enough money to do anything new, aka Toys R Us. Toys R Us had enough to pay. They did not have enough money to put a website together that would be serve customers and be as equivalent as Amazon. They just didn't have it. They had no room in the budget for that. And so with that, Bain Capital was able to close on them because they knew, hey, you're never gonna make enough in this deal to grow. You're just a zombie company and we're gonna take advantage of it. Okay. Does that make sense, everybody? Put a 1 in the comments if it does. I just shared my screen, some of the special purpose acquisition company. Thank you, Doug, for sharing Diamond Dave's options class.
But I want to ask you something real quick.
For sure.
Do you think Lucid Motors is a zombie company? Because without the merger with CCIV, do they have anything? Because if they had something, they were actually a legitimate organization and they had the capital, would they ever need to merge with CCIV?
Well, here's the thing. I think they might be teetering on it because any company, and I'm be careful, but zombie companies went from 2.5% of our economy to during the pandemic, 19% of our economy. Like from 2005 to 2019, it was like it went to 16%, which is bad, right? 16% of all businesses you see are zombies. Well, now because of the pandemic, it's 19%. And I have a feeling it's more. I have a feeling it might be 25% of the companies you see are zombies, right? I have a strong feeling that all these mergers we're seeing are because companies are zombies. And the only way they have to infuse the capital is by buying something, right? And who's to say that they paid them cash money? Do you know what I'm saying? Like, did they put cash money in their hand, or is this a promise to pay? Because several companies, not WhatsApp, but there's a couple smaller companies that got bought by Facebook, and they were like $3 or $4 million. Small amounts, right? Not a big deal, not a big buyout. And the guy was like, even Facebook paid them in partials, paid them a big lump sum. 6 months later, paid them all the rest. Well, why would Facebook need to do that? because they need capital. Like any other business, you need something to people. This is a great product. Facebook is just a giant online magazine, y'all. Like, as much as I can say that, like, if something new thing comes out and everybody's eyeballs goes over there, they take a hit like everybody else. Yeah. The number one thing they have is your data. That's it, right? Sherlock Holmes, I see that stock. We'll review it in a second, but let me go ahead and share a few things over here. So again, Dale Singer, Facebook co-founder, latest to join SPAC bandwagon, because there's some people in their feelings about it now. They're not even, But again, SPACs dominate to raise. Some of these IPOs are trying to raise $40 million, $40 billion, and I'm like, to do what? Right? So it has to be, to me, I have a feeling it's kind of like, hey, we got money and we don't know what to do with it. It's saying, go ahead.
Yeah, but I mean, the question is, and so like, we'll take Nikola, right? I knew Nikola was a fake company from the start. Mm-hmm. They were a SPAC. But what they're able to do is they're able to form this company, and they go to the public market and get retail to change positions with them. Mm-hmm. And so that's the question, is that when you're looking at these SPACs, what I'm looking to find out is that, do they actually have the capacity, the ability to execute on what they say they can execute on? Mm-hmm. Because the barrier now to take something to market is so low. Everybody's doing it, and we're in a era with massive amount of liquidity. Mm-hmm. So everybody's not trying to put money into the market. So that's the biggest issue, is that it's easy for these hedge funds and these banks to form these SPACs, or for these really wealthy people to form these SPACs. But one of the reasons why they're forming is because they're trying to go to market to get retail to change places with them. I don't think they're necessarily forming this because they really have something valuable that they're trying to execute on.
Mm-hmm. And something I really want you guys to understand, and I'm trying to break it down as we do this show, Michael Dell, his family office, like I've been telling y'all, and Diamond Dave, I don't know if you've been to the channel long enough to see it, but I went to a training, and essentially over the next 8 years, we'll have $30 trillion switch hands, right? Wealth transfer. But 30% of that will go to family offices. Now, people are like, family offices, insurance companies, everything. Anything you could think of can be a family office. Now, you may say, why? You have teachers unions, you have pensions, you have people that need a 4 to 5% dividend payout.
Yeah.
And what ends up happening is real estate is so competitive with the foreign investment we have in this country, which is crazy that we let foreigners invest in our country, that teachers union, pensions, they can't compete. So all of a sudden they'll buy a family office that has a bunch of insurance companies. The family offices has, 16 insurance offices in the state of Wisconsin. Okay. And it's like a swapping of money and paper, right? Like, hey, now the teacher union gave you this infusion of money, and you guys will pay the teachers union for the next 15 years, right? The profits, right? So a percentage of the profits. And that's happening at such a scale that I don't want to ruin the channel by discussing it, but I basically sat in meetings and we're like, oh my gosh, I need a family office, right? So, because you can throw just about anything under the umbrella of a family office if done right. I don't want to go too far into the weeds, but this is a SPAC and a family office are almost the same thing.
Okay.
On some levels. Okay. So reason I bring that up is in this article, it says even Michael Dell made the leap with his family office registering plans this afternoon to raise $500 million blank check company. Now, you're going to say, what is Michael Dell selling? He don't even have to tell you, because your thought is this is Michael Dell, who created Dell Computers, who has 16 buildings over here in Round Rock in Austin, even though half the buildings are empty before the pandemic. And they were leasing the other ones out, and they went private. So we always make the joke here in Austin, Dell could be doing as bad as IBM. We don't know. We don't see their books.
Exactly.
So when I talk to y'all about some of these things, I'm actually actively going to certain trainings and masterminds, like hardcore learning, like, oh man, I could basically create a family office tomorrow, and we can go buy companies and then literally create this conglomerate and sell it to a teacher's pension.
Yeah.
I mean, Diamond Dave, like, we'll have an off-camera conversation, but I was sitting there like, and it's literally just, and the reason I bring up the zombie companies is because a lot of these family offices, Michael Dell's family office, they're going to take that $500 million and buy up a bunch of the same type of company. They usually don't buy this, weird conglomerate of stuff. They usually buy the same type of company over and over again and fill up the family office with all these companies. And so that's how they sell them off. So anyway, but yeah, you also had Facebook co-founder register plans to raise $300 million in a SPAC. You had a fintech entrepreneur who failed at SoFi, which does loans, and most recently Figure, another fintech company, which it's in the home equity space and the blockchain space, raised $250 million for his SPAC. Now I'm saying these are big name people, and they raising $500 million. There's gonna be some small name people that we never even heard of, gonna raise 5 to 10. Easy.
Exactly.
Easy money. But that's another video for another day. So part of this is something I want y'all to pay attention to, is because altogether, according to Renaissance Capital, 16 blank check companies raised $3.4 billion this week. And new founders continue to flood the IPO pipeline, which Diamond Dave, you actually have an IPO class that you teach people on, right?
Yes, definitely. I teach people, and this is what I'm trying to get them to understand, is that there's this rush to go IPO. The IPO process is about people exiting. Retail thinks the IPO process is about them entering. So what we figured out and we've understand how to do is, how can we capitalize on the exit of the IPO and to make that have money come to us as retail and the original investors change hands? Because what you were saying is this: the only reason they're building these SPACs together and they're raising this capital is people are looking to get a return on their capital. They're not satisfied with the return that they're currently getting. They're looking for a way to get a return. They're convinced about putting their money in this SPAC, they're going to get a return. When they take these SPACs, they form these mergers, they go IPO, they go public. They're doing this because they want to get a return. They're going to now sell to retail that this company is the best thing since sliced bread, and you should put your money into this company. And as you move in, they exit. So once you understand that process and you understand by their documentation when they're going to exit, that's when you can create a path to where you can capitalize on that exit. So that's what we've done with the IPO course. But I want the people that are watching this, even if you don't buy my course, to understand that they're not IPOing for your benefit. They're IPOing for their benefit because they go public for a specific reason that has very little to do with the retail market. But they have to convince the retail market that this company that they're going and taking to market is the best thing since sliced bread to get retail to buy into what they're doing. And you really got to understand that.
I love it. I love it. And you guys are giving great commentary. Sherlock Holmes, we're still going to look up Prospect Capital. Give us a second. Facebook is a magazine with free writers. That is the quote of the week, Fallout. I really want y'all to understand that. Some of the training I went to, I sat back and was like, pooh. Diamond Dave, I was like, we playing the wrong game. Everybody stop what you're doing. Stop what you're doing right now. Like, you know what I mean? And like, when I see Clubhouse, there's going to be like 15 Clubhouses coming up.
Yeah.
Just from some of the conversations I've had where people are like, ooh, all them people over there chatting that up. Huh? How do we make one of those? Right. And like, it's like no effort. Like the people are creating companies that, oh my God, like this guy was talking about telehealth. And by the time I finished listening to him at this event, Diamond Dave, I was like, you just brokering meetings between doctors and patients. You're not like, he's got this app and everybody's like, oh yeah, man. And I'm like, by the time I finished listening to it, I'm like, you just created an app to broker a bunch of, you know what I mean? A bunch of contracts. Right. And his selling point is they go out and call all these doctors' offices who need what? New patients anyway. Yeah. And they just, it sells itself. And he was like, yeah, we had so many people on the app that we didn't have enough doctors to fulfill it. So it's like, boy, I'm telling you, there's a lot we could talk about, but I'm going to keep the show here. What's up, Fort Worth? So yes, the next two, I'm kind of segueing it, but the last two things we'll hit on before we go to our other show in a bit is in trading options on gas, plumbing the move. I'm in DFW and I see this opportunity a mile away.
It's trading options on gas. So I don't 100% understand the question. Is trading options on gas plumbing? Does he mean gas or plumbing?
I don't know. I think he means gas. Ruti Gutierrez was always like trading some natural gas company, I thought. That might be what he talked about. Cal, congratulations on your $40,000 in options.
Good deal. Good deal.
New
What company
World.
you trade?
What company did you trade, Cal? New World Order. He says, Erica, this is a great show. This guy, Diamond Dave, is on point. I mean, I bring on the best, you guys. He's got a great course. I've been sharing it. I'll email it out to all my students again. I think he means plumbing and gas.
Okay, gas and plumbing. Okay.
I feel like for maybe Texas, possibly for some of the gas companies I see in Texas, especially when I went. As soon as I found out what company Jerry Jones was in, I went to the website. It was $6. Then it was $6.15. Then it back down to $6. I was like, "Don't worry, buy some now. Just sit, because like I'm gonna do a show on it probably Sunday with who's gonna win out of Texas." I'm already on the phone with people who are starting solar panel companies like overnight because of this, because bills will be 17 grand. And I'm running into young men, young Hispanic men, young white men who started a solar panel company. They made $1 million their first year. They don't know what they're doing. They just hire anybody to go knock doors because it's such an appealing thing when you live in a state with 300 days of sunshine. Yeah. And then when you don't got to pay out of pocket, an incentive is paying for it. Oh, for sure. For sure, I'll sign up. Right? So yeah. Tam said no code, low code, create apps with drop and drag, get funding, or create a SPAC to go to market. I'm telling you, Tam,
exactly.
In a couple of weeks, there's a couple people I'm gonna go to Miami and talk with and be like, yo, let's do some big things. But we'll see how it goes. Let's see. Okay, you said Prospect Capital. I'm gonna look that up for you really quickly. I think that's in actually my stockpile. PSC. And that'll be our last one. We'll kind of close it out with. But yeah, over 45 SPACs are submitting their initial filings this week compared to 10 traditional IPOs. This guy said, perhaps it's no wonder we're starting to see headlines like one on Yahoo News just tilted yesterday. Why some SPAC investors may get burned. Yeah. Because they possibly will. But let me see here. All right, so Diamond Dave, give us some feedback on this company, and this we'll close it out here with this one. Let me share the screen. Now this company, I think I have it in my portfolio because they pay out a dividend. What's their dividend right now?
It's an energy company in Texas?
No, this is real estate. And it's in New York. It pays out a dividend of 9.9, so it's been pretty popular. Okay. 2 days ago, they made a little bit of news in 25 million notes. Let me see. I'm trying to find a good one. Give you some good info on it. Where the company website at? It's a business development company. Can everybody see this page? No. No, yeah? Yes, again. Okay. We make debt and equity investments in the United States, middle market businesses, a range of industries. Seek, deliver steady, attractive returns to our investors. Okay. They have 365 investments funded, and they paid out 3.3 in billions in dividends.
Yeah. As long as if they're in dividend play, as long as they have the capital to maintain the dividend, I would say stick with it. Yeah. That's the only biggest thing. When you're looking at a dividend play, as long as they have the capital inside the company to continue to maintain the diviend, and that's one of the reasons why you're in it, I would say stick with it. Yeah. They've been 16 years as a company, but I've had them for maybe 2-3 years in my stock. And I just, every month I would get a little, and I would share it on Facebook, on Instagram. Hey, I got my dividend from this company every month. And so that's a part of their thing. Their whole thing is attractive dividend yield, dividend reinvestment plan. They have a broad investment portfolio. That just means they invested in a bunch of stuff. That's what that really is. But yeah, no big industry diversity. I'm going to go here and kind of see. Context is like crying. IT services, 3%. Interactive media services, 3%. Commercial services and supplies, 3%. Textiles, apparel, luxury goods, 4%. Diversified customer services, 4%. Healthcare provider and services, 9%. Consumer finance, 12%. Subordinated structured notes, 13%. That basically means they own a bunch of notes. And then here's the kicker. Equity, real estate, REITs, basically 16%. Yeah. And a conglomerate of other at 30%, almost 30%. Okay.
So
yeah, because when I was reading the description, I thought they sounded like a REIT.
Basically, I mean, like I think they used to have more REIT in this mixture, and now they have less, which is interesting. But hey, they can keep adding to it. They may have saw in the future that REITs weren't going to be staying with real estate wasn't going to be their long-term play.
Okay.
Did that answer your question, Sherlock Holmes? That's just our basic rundown of it. But I've had it. Disclaimer. I've had that stock currently. Let's see. Everybody says another great session. Thank you so much. Thank you, Diamond Dave.
No, I appreciate it, RW.
Look, Miss Bella said it was one of the actual free stocks I got when I signed up for Robinhood. A lot of people did, and that's why I was like, "Is this a crap stock?" Sherlock Holmes says I've got 6,000 in gains with them. Got in at $5.28. Been holding since March of 2019. I got in for the dividend. Never knew they'd be at 7 though. Keep holding. I mean, unless you want to sell.
Yeah, stick with it. Next thing you know, it'll be $10.
Newer order. We're gonna wrap the show up, but definitely email me that question, and we'll bring it to Diamond Dave next week, so he has time to review it.
Okay.
And you guys can, and we'll close the show out here. But Diamond Dave, tell them where they can find you, and what does your course teach?
Okay, so you can find me on YouTube and under Diamond Dave, on Instagram under Diamond_Dave. So what my course is really designed for is a person that's working a 9-to-5. They're not satisfied with their 9-to-5 income. They want to either supplement that income or replace that income. And they're also not satisfied with the amount of time that they have to spend to generate that income. So what we want to do is teach you how to really leverage the options market as an options trader to generate $1 million of 2K, right, a month in profit. And we believe that once you can hit that 2K a month in profit, that becomes a baseline and allow you to propel to work yourself up off of that. What makes my course different than a lot of other courses is not just that I just give you a lot of information and you have to consume it and figure it out by yourself. I work with you. I have a Discord group that you can join. I give everybody that buys my course at least an hour of one-on-one consultation. And also you can reach out to me on Discord. You can reach out to me via Instagram. You can reach out to me via Facebook. I'm always available to answer your questions because I'm in the market on a day-to-day basis. So one of the advantages is that you're not just buying a course and you got to figure it out on your own. I actually will work with you. And as long as you don't quit, I'm not going to quit on you. I know that you can be successful in this particular space. You just have to stick with it and learn how to cut a lot of the noise out from the market. And from a very pragmatic point of view, understand what is being presented in front of you and how you can capitalize on that. So if you have any questions about it, just hit me up. I can send you an infographic that can get in a little bit more detail, or you can just get it through Erica and she can really help you get into that particular course. But I really want you to understand that the market is accessible to us. We just got to start getting involved into it.
For real. I mean, again, every time I read those little articles about Black people ain't got no stocks or no options, white wealth went up, I'm like, if you don't understand something, you don't pay any attention. I just saw a really sad video yesterday where this woman and her husband didn't have any life insurance, and he died at like 45.
Damn, that's crazy.
And it's like they put this video together, and he was a loving father, sending videos to his kids. Trucker, he's talking to him like, okay, you got it today. Do what you got to do, And you guys, you have to understand these things are not just, oh, that's when I'm 60 or when I'm 70. Some of these things you need to understand today, and you need to put them in place. So I put stock market, like at least knowing about the stock market and having knowledge, like, hey, if I got an extra 1,000, I'm gonna put over here with this dividend stock and just let it pay me out for the rest of the year, right? And later I'll keep adding to that. That's really the lesson I want y'all to get when I bring these people on the channel is you don't have to sit there and be like, I'm gonna just make all this money, yeah, and make all this money and do what? If it's not giving returns, it's crazy. So also I want to thank L's Life for the $10 super sticker. Love the tea. Thank you, Andre Hatchett, owner Beyond. Thank you, Miss Bella, for supporting the channel. $30. Thank you, Erica, for the live. So happy I was finally able to catch it. I signed up for Diamond Dave's course, and yes, it's very helpful with learning options. Hey, y'all, he got a testimonial while we live.
Yeah, he likes it.
Yeah, okay, awesome.
Appreciate it, Miss Bella.
Totally. Listen, I appreciate it. Listen, somebody said Dave's sharing the truth. There's money to be made in swing trading. Awesome. So you guys, if you haven't, we are getting ready to do a slam bam 2 for today, and we're going to be talking about credit. Joe Biden just threw fisticuffs for credit. So we're going to close this video out. I definitely want you to meet me over there at the credit video. See you in a little bit, David.
Okay, talk to you later.
All right.